Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, in today's episode, we're talking about credit cards, which is not actually a surprise. But, credit cards are one of our favorite financial tools here on the show because of the rewards, points, earnings, redemptions, sign-up bonuses, all the great benefit it can bring you. But if you're just starting out in this game, well, what exactly is a credit card? What are the things you need to know? And why the heck do we like them so much? That's exactly what we're talking about in today's 101 video. So if that sounds interesting to you, of course, go ahead, press the subscribe button, and let's get to work. So that's the gist of the video. So we should start at the top. What is a credit card? Yes, it's a piece of plastic or sometimes metal, right? That you can swipe and, people give you stuff once you swipe. It's pretty cool, right? Well, the basic term is, credit card is actually a revolving line of credit. So you have basically two types of credit, right? So you'd have, a house, a mortgage, or a car loan, right? That's a fix. That's why they call it a 15-year fixed mortgage, a 30-year fixed mortgage. It's fixed price for 30 years. Yes, I know they have variable rates and things like that, but let's just keep it easy right now. So, you're going to borrow $200,000 to pay for your home, and then you're going to make the payments each month over 30 years. Then the loan will be closed. You'll own your house outright. Credit card, a little bit different. Credit card comes with a credit limit and it revolves, right? So if you get a limit of $1,000, you have access to that $1,000. And then if you choose to use it, you go to the store, you make a $100 purchase. Well, now your credit limit is $900 and you have $100 outstanding. And once you pay back that $100, your credit limit will go up back to $1,000. That's what we mean by revolving credit line. So before we go any further though, there's some terms we should talk about which should make this a lot easier. So I'm put them on screen again. I'm going to briefly talk through each of them. So again, we talked through what a credit card is. It's a revolving line of credit. Now, credit limit, that is the max amount of money that can be borrowed on that credit card. That's set by the issuer, who is our next term. The issuer is going to be the bank or financial institution basically funding the credit card. So you've got to use someone's money to make the purchases. You're using the bank's money, Bank of America, Chase's money, basically to make the purchase, and then you pay them back, at the end of the billing cycle. Another term you'll hear is payment network. So that's Visa, MasterCard, Discover, and American Express. These are the ones helping facilitate the payments or the transactions. There are other people involved in this, but for, again, 101 stuff, these are the main players that we need to know. And you'll know because they're going to have their logo on the credit card. Now, the card holder or the borrower is you. If your name is on the card, you own the account, you're the primary owner. Again, when you use the revolving line of credit, technically you are borrowing money from the bank, and then you will pay it back at the end of the billing statement. So now that we know the terms that we're going to be talking with, let's talk about how this actually works. So, you're going to apply for a credit card, right? Let's just pick Chase. They're one of our favorite card issuers. Let's say you apply for the Freedom Flex card. So they're going to ask you a series of questions. You're going to talk about, your income, your address. They're going to have to verify your identity, so they'll put in a social security number. A lot of this stuff is rules that the government has in place called Know Your Customer that requires financial institutions to collect this information about potential borrowers, potential customers. It's really, we can debate if it's, intrusive or not, this, that, and the other. It's really intended, to, fight against money laundering and funding terrorism and things. That's how it started. Doesn't do any of that. Debate for another day. So that's basically what they're going to do. They want to figure out, do you have a job? What kind of money do you make? Your credit, your social security number will help them check your credit score, which is going to, help them understand how much money I'm comfortable lending you, if I'm comfortable to lending you any money at all, right? Now, this is basically, more often than not, it's called stated income, which means they're not going to ask you for proof, like a W-2 statement or a check stub or anything like that. So basically just stated income. Now, that's also why credit cards end up having such high interest rates because, one, it's an unsecured loan. Again, back to the housing example, if you don't pay your mortgage, they can take your house, so it's secured by collateral, which is the house. That's why you need to get an appraisal on your house so they know how much it's worth, right? But, if you go and you buy a sandwich, you never pay the credit card coming back, no one's coming to take your sandwich, right? There's no collateral, and again, it's stated income, so there's not really proof that you make what you make. So they compensate this with super high interest rates. Of course, we'll talk about how to avoid this towards the end. So anyways, you go through the application process, you get your card. We'll talk about the types of cards as well. And then again, you can go and you can make purchases with the card. So now that we know what we're talking about, credit limit, the max amount that you have. So you say you have $1,000 on this Chase card, make a $100 purchase. Your credit limit's now $900. Visa and MasterCard help facilitate that transaction within seconds. And basically Chase is now lending you $100 so you can get your item, whatever it is, and then leave the store with it in seconds. So if you fast forward to kind of the end of this, still billing cycles are like, 3.5, 4 weeks. So the end of 4 weeks, Chase is going to send you a bill and like, hey, you owe us $100. You're going to pay that in full because that's the best way to do it and avoid those super high interest rates. So you're going to pay it in full. But there is at least, a minimum payment that you have to make if for whatever reason you cannot make it. Pay it in full, right? So you're going to make sure you at least pay the minimum. They'll call out exactly what the minimum is and when it's due in the credit card statement. But again, aim for pay the full amount. Now you're going to pay that. Okay, Chase is like, cool, I have your money. Your credit limit now is back up to the full $1,000. You have access to that again. And in the back end, what's going to happen is Chase is going to also report this to the credit agencies and say, hey, RJ made his credit card payment on time, which is good because that helps you build credit, right? Credit, big part of credit, especially with FICO, is payment history, which is looking at, did I make my payments on time? So that's a very quick, very brief summary of what's happening here through the process of one transaction. Now, credit cards, you might also be familiar with debit cards, right? I have a checking account. They just gave me a debit card that allows me to spend money. Why would I want a credit card, right? Why do I need to borrow money? Should I actually borrow money, right? I hear that's not good. Well, it has its pros and cons. So the difference here is that a debit card, it functions the exact same. They look the same logo, same payment networks on there, right? Visa debit card, Visa credit card. But the difference is a debit card is pulling money or debiting it directly from your checking account to pay for whatever you're buying, right? So the good news is you're not borrowing anything. It can help you budget better. There's going to be no interest because you pay it immediately, right? So there is no bill. Downside is a few things. It doesn't help you build credit because there's no on-time payment because we're just taking the money from your account. Number two is credit cards come with a lot of protections or a lot of fraud protections that are mandated by government rules. So if someone stole your credit card number or something like that, you're covered. If they steal your debit card, they're getting better at protections, but the problem is they're still taking your money directly. And, the bank might say, well, while we investigate, we're going to put a freeze on your account. Well, now you can't get any money, right? Versus you use a credit card, you can just switch to another credit card. And in fact, normally the bank's process will be, they'll take it from there, they'll overnight you a new card. And you're very rarely negatively impacted in cases of true fraud if you catch it quick enough. There's also prepaid cards as well, those Visa reloads or things like that. Again, that's very similar to a debit card. You're just loading money on it, then spending that money. So again, that's kind of why you would want to consider a credit card for credit building and protection. Of course, we're going to talk about rewards earnings next because that's once you've built credit and you're established, rewards earnings kind of the biggest draw to these, right? So when you talk about types of cards, there's a few different types. I'll put them on screen for you now and we'll kind of talk through some of them. So first of all, you have what I'm calling like rewards cards to start. So store cards, they can offer some rewards, but a store card is basically like, if you remember the old Kohl's charge card, right? People love Kohl's, but it only worked in Kohl's, right? Now you have student cards, which can earn points as well. Usually not a ton of points, but you can earn them, and that's really, set up for people just getting into the credit game. Maybe you're just now getting into college, something like that. So the issuer knows you're not going to have that great of a credit score because you were probably a ghost in the system so far. Cashback and travel is really where it's at. These are cards that are going to allow you to make purchases, and then you earn either cash back. Just like, hey, it'll be 1%, 2%, 3% back on your purchase, or travel will allow you to earn points that you can redeem for travel. Now, I'm not going to talk too much about redemptions here because, again, that can go down to a whole side thing, but suffice it to say, 2% back is kind of the table minimum. So you look at something like a Citi Double Cash, that's going to give you 2% back on all your purchases, right? It's a cash back card, so you can then cash that back out to statement credits or into a bank account. So you're earning money for things that you already have to buy. Now travel, very same thing. These cards are generally travel focused, right? So you're like 5x back on hotels or dining or rental cars. You get the point, and then you can redeem those points for travel as well. Some of these end up being interchangeable that you could redeem. Chase Ultimate Reward points, for example, can redeem for cashback or travel. Now, in addition to other cards, there are some other types of cards that may or may not earn rewards, but it's not necessarily the point of the card. So if we take a look at this, we have low APR interest cards, right? Because so they have cards that are set up where, hey, if you know maybe you're going to have to make a large purchase, there's no points, there's no sign-up bonus for the card, but you get a low or 0% APR for getting the card, which means there's going to be no interest for a set period of time. They have balance transfer cards that basically allow you to consolidate debt and transfer balances to the balance transfer card using that credit limit. They have secured cards, so maybe if you're trying to build credit, you can basically what you do is you open up a bank account with, let's say, U.S. Bank, for example. You put in $500, and that $500 effectively becomes your credit limit, hence securing the card, so you can build credit because it is a credit card, but the bank's not putting themselves at risk because basically you gave them the $500. That's the type of cards, right? Again, we have a ton of videos on the types of cards, but what are the benefits here of credit cards? Now, we've kind of talked about some of them as we walk through this video, but to put it on screen and summarize here, rewards is the biggest one, right? You're going to get rewards points. You can end up cashing out a lot of points for travel and cash back, but there's plenty of ways to do it to get much more value out of these points than just 1 cent per point, which is generally what a point is worth. Is 1 cent per point, but again, when you get fancy, once you understand this, then you can move on to, well, how do I get more value out of these points? Bonuses, so if you sign up for a credit card, oftentimes they'll have a thing like, hey, if you spend $500 in the first 3 months, we will give you, $200 back, which can be great if you have to buy something that's $500, you can use that card, one swipe, you've got $200, and you can look at that as $200 off the thing you purchased. We talked about building credit. It's probably the easiest way to build credit, honestly, is to get a credit card, because you start your credit history and you start making on-time payments. And then, of course, the security in the card itself, because we have all those purchase protections, we have things like credit card chargebacks that help protect us from fraudulent purchases and even stores not delivering on what they were supposed to get us. That's all very helpful to have, things you just don't get in other products. Now, with that, there are still some things we need to avoid. So again, on screen we have it, annual fees. So the cards we talked about, we're kind of just talking about, the no annual fee cards, right? But as you go farther into this game, certain cards will charge you an annual fee. It's a fee to have the card every single year. Now, this fee is generally offset by benefits and things the card offers, but you just have to be aware of those fees. The fees can really add up, especially if you're not using the card or not getting your full value out of it. Interest, we talked about this earlier. You definitely want to avoid interest payments by paying in full every single time. Other things here, later missed payments, that's really going to hurt your credit score. So you can do something like set up auto payments, right, to pay at least the minimum, because if you make the minimum payment, it's still an on-time payment, even if it's not in full. And of course, even those other cards we talked about, they can still have fees. There's still balance transfer fees. Sometimes there's foreign transaction fees, if you're buying something from overseas or out of the country. So those are just some things to watch out for, but they're easily avoidable as long as you know what you're looking for. But again, overall, we have a ton of videos on the channel about where to start in that 101 playlist that I will link down below for you. But this has kind of been your overview to credit cards and what they are and how they work. So of course, if you need to know anything else or I missed something, let me know down below. But if you like this one, guys, drop me a thumbs up down below. Of course, if you liked it, consider subscribing to the channel, because I'm posting content just like this every Monday, Wednesday, and Friday. Of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. My question for you guys is, let me know what other type of 101 starter type videos you would like to see added to that playlist down below. Really trying to get people one spot where they can go start there and then choose to scale up their knowledge as much as they want as they explore this game of credit and finance. But anyways, guys, that's been it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.